Good morning, good afternoon, good evening, traders, and welcome to the 1942nd edition of Short-Term Trading live with Oscar. Good evening, traders. This video is being brought to you on a Thursday night for Trading Friday. That is May 24th, 2019. Please know, if you do not, that trading futures, trading options, trading stocks, trading anything these days is extremely risky, causes and can cause substantial financial loss. It's certainly not suitable for everybody. If you do not have risk capital to lose, you should not be trading. Never trade without stops, and place your stops first. Now, let's move on. Russell 2000 daily bar. Look at this wonderful, ugly bear flag I pointed out in the last couple of webinars I've done. It basically formed itself below the 250 bar moving averages. They had their golden cross right here. They could very well uncross right here if this keeps up. We fell into a bear flag, and the bear flag is doing its job, and we fell out of that bear flag, and down we should go. Now remember, this all started when we started to look at stuff like this, the double tops. Remember, kids, when we see a double top, we sell a double top. Don't forget that. Now watch. Double top right here. You know what this represents, the first double top right here? This is when we put tariffs on for the first time. Tariffs on China. January 2018, we put tariffs on China right here. In fact, let me put a little pointer on this thing for us. Right here on this day. Boom, this week we put tariffs on China. And we cracked. And we rallied up, put in a double top, and we cracked. We rallied up, cracked, put in a double top again, second one. And guess what happened right here? Right here. You know what this is? This is tariffs 2019. Right after Trump announced the tariffs in 2019, a week later, we started to crack. The news came out in the charts first. Now we're below the 50 bar moving average on the weekly, and as you can see, when you get below the 200 bar moving average on the weekly, it's not very kind to this market. You get above it, nice rally. Hold above it, right? Hold above, nice. Hold above, big rally. Hold above, hold above, hold above, breaks, big break. Tries to get above, can't, big break. Right? So it has big reactions around the 50 bar moving average, and that's where we are now. But let's not forget this. On the weekly, going to the Dow Jones Industrial Average, that last chart was the transportation average. The industrial average, first round of China tariffs, 2018, we dropped 3,300 points. Boom. Second time we got up to a level that high, put in a double top. And we cracked. Boom. 2,500 points shaved off the market. And then the market proceeded to crack much further, but we're only going to count the first crack of 2,500 points. It went lower. Then we rallied back up. Second round of China tariffs get put on. Boom, the market cracks. And we have a projection now. Our projection, which I've given out before because we've only dropped 1,467 points from the top here to here, the low of this green bar. It's only 1467. This was 2,500. Then it rallied and dropped way more. This one was 3,300 on the first initial drop. So we are expecting more downside. In fact, my projected downside minimum on this move is right here. Comes out to a projection of 23,690 right here. That's what we're basically expecting to happen as we continue to move lower because we're cracking from another double top. So that's our projection. We should get about to the low of this bar and then maybe lower, but that's our first projection now that we're cracking from the double top. So from a high of 26,689, we've cracked so far 1,467 points. I say we drop about 3,000 points, bringing us to 23,600 from where the beginning of the drop started at 26,689. And then I wanted to remind you, be careful of holiday reversals, kids, because they come at us. Look at something like gold. Now, gold has been behaving inside of this killer resistance line. It hits it, starts the line, comes down, back above, hits the line, comes down, hits the line just about, stops at the 50-bar moving average, comes down, gets above the line but fails, comes back down. So this line is considered resistance, and it's red, this line that starts up here and works its way down. Red resistance line. Well, look right here. We just got above it. And why? Because look at this crazy holiday reversal that just took place in gold. Right here. Gold was going down. Let's delete the bar. Watch this. Gold was going down and creating an Oscarism known as a bear flag. The bear F flag. Put it here. Put it here. So you've got a bear F flag. Right? And you can kind of size it up this way. This is your flagpole. This is your flag. You can move this to here or leave it there. I'll make this the same color so that we're consistent. And you've got your flagpole. In fact, let's make that look just like the rest of it. You got your flagpole, you got your flag, and then the holiday reversals. The phenomenon of holiday reversals come along, and this is what happens on Thursday. Look at this crazy reversal bar all the way up. So watch out for those holiday reversals, kids. Something that you can make money in on the short side suddenly has the phenomenon known as the holiday reversal. So back to this red resistance line. Keep it simple, traders. Keep it simple, traders. KISS. Not K-I-S-S. The old adage used to be this. Keep it simple, stupid. And I don't like that. I don't think we call anybody in this industry who's smart enough to learn about technical analysis, put money in a trading account, and learn to get better at it. They're not stupid. Keep it simple, traders. Now, keeping it simple is looking at something like this trend line, keeping it red, and when the market gets above it, like here or here, you turn it from resistance red to support green, and then you keep your eye on it. You get back below it, it becomes resistance. You get above it like you are now, it becomes green support. And that's what I wanted to show you. Watch out for those holiday reversals. They are abound. And remember, kids, keep your emotions out of trading. One of the best things you can do is join me at livewithoscar.com and hang out with me in my free live trading room. And say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I will see you all at livewithoscar.com.